Hello, everybody, and welcome back to another episode of the Edchalk podcast. And today I'm joined once again with Ron Myers, who was one of our previous guests. And his episode is the number one ranking episode in our channel. So we decided that we want to invite him back and see where we left off. So, Ron, can you give us maybe a recap of some of the things that we talked about before and where you are now in your business and your ventures?
Sounds good. First of all, Raphael, thank you for inviting me back to Edgehog. It's always a pleasure to talk to you. So we spoke about 5 or 6 months ago. At the time, I talked a little bit about my origin story and my background, software exec, that sort of thing. Decided to launch my own e-commerce software company. That's still chugging along. We talked a little bit about mindset for entrepreneurs, and also I had recently just launched was in the process of launching a private art fund. It's a Reg D, SEC Reg D 506B, which is a friends and family deal. So, and I'll give you an update on where that's at. But since we spoke, I think I've been to like five. I made a decision this year that I'm going to spend a lot of time on coaching and getting in the right room, right? So a lot of masterminds. So I went to Capital School going all in on the Capital game. Went to Capital School in February. I'll probably engage a coach from there as well. That was down in Aventura, Florida. I went to a real estate mastermind in San Antonio in April. The beginning of May. This month, we're almost at the end now. Some people I met at Capital School are real players, high-end fundraisers and investors, that sort of thing. And they invited me down to, it's called Big Minds Group, a full day brainstorming in Salt Lake City, and then 2 days of a private money group meetup, which I thought was fantastic. So I spent time there, made some great contacts, great friends, great networks. By the way, one of the things I do is whenever I'm at an event, and the people that I meet in a network, I save their contact info. I put in their contact card exactly where I met them, and I make sure that I make a phone call to each one of them when I get back. And as I say that, I just got back from the weekend in Tampa at it's called the Deal Room for multifamily real estate investing, and I have about 15 or so phone calls I need to make as well. So that's kind of what I've been working on. I will tell you that everywhere I go, I'm very well received. Everybody loves the private art fund. Everybody, we're from one of the private money group meetups. I met a gentleman that is running a fixed income debt fund. I'm very intrigued in that. They call that mailbox money. So people sign up on the portal. They invest. The month after they invest, they get anywhere from 10 to 14% annualized, paid out monthly automatically. There's a whole portal involved there. So I'm working on a roadmap to partner with this team as well on some great projects for, everybody loves that 10 to 14% return, right? And then shortly after that, I'll start the Real Estate Foundation Fund. I'll be going on the road June and July, Atlanta and Georgia and Texas and probably North Carolina to start looking for some areas to hunt up some multifamily real estate deals. Since I've got a little investor pipeline now, it's time to get rolling. So Private Art Fund 1 is just about done with 35% return. We're going to be rolling everybody over. The paperwork's in process for Private Art Fund 2. That's a 10 million, 10-year fund with annual rollovers, 21% investor preference, and we expect between 35 and 45% return every year for our folks. Hopefully before summer's out, I'll have the fixed income fund and the real estate foundation fund up, and that's kind of what I've been working on. I really appreciate the contacts I've been making. It's fantastic to network with some high-end individuals. I said before, get in the right room, right? If you're the smartest guy in the room or the highest net worth guy in the room, you're probably not in the right room. So I've been working on getting in the right room, and everybody's leveling me up, and I'm certainly enjoying that. So thanks for asking. One of the things I guess I would take away from the mindset from our first call is, when you go out and you do these things and you meet people, and if you're a big idea guy, ideas marinate in your head, and those ideas produce intentions, and from those intentions you take action. I'm working on the fixed income fund roadmap right now. And from those actions, we will get results. So the other thing I'm also looking at is automating investor pipeline. There's a lot of great tools out there today for, standard, everybody's seen it, Instagram, TikTok, Facebook ads, landing pages, follow-up phone calls, and then a follow-up sequence to make sure that we are building the investor pipeline, that sort of thing. And there's quite a bit of AI involved in some of that stuff now. So, I love where the industry is going, and I think that's a project and a half to just evaluate all that stuff. But I expect I'll be testing a few tools and figuring out which route we'll be going on that. But I want to automate the lead flow and pipeline, and then duplicate myself with folks on the phone and see if we can really ratchet this thing up. So that's kind of where I'm going with this right now. And the future, I'm excited. I'm excited.
Wow. Yeah, you're one of the busiest people that I've ever spoken to on the podcast. You have like 20 projects going on all at once.
Right.
But what it seems like, and correct me if I'm wrong, but so what you're doing is that you're essentially like you have a project, and then you're funding it through investors, and then you're guaranteeing them a return based on the project that you're working on. And you're doing real estate, you have your art investment, and then so essentially you're good at identifying good potential investments for these people,
Right.
and then you make money in that process. Is that
Yeah.
a good? Am I getting that correctly?
You're on the right track. So a couple things. First of all, for clarity, there's no such thing as a guaranteed return except for the fixed income return and fund, and that's not even guaranteed either. I mean, it's not a T-bill. It's we're buying debt and reselling debt in large tranches, and then paying people out to participate in that transaction.
Yeah.
But my partner's been up doing this for 2.5 years now, and they're up over 8 figures in transactions as it stands, and we hope to help get them to 9. So a couple of things. First of all, talking about promised returns, everything is sort of a projected return, if you will. And if my SEC attorney was on the phone, he would tell you. But let me take a step farther back. So
Okay.
through the software company, I was fortunate enough to make a little bit of disposable income. And from that disposable income, I got involved back in 2019 with multifamily real estate investments. And I really met, again, the last episode, I used to live in Los Angeles almost 3 years ago. I moved out to West Palm Beach, Florida. Loving it out here, by the way. Anyway, so I met a lot of great operators across the country. They call the syndicators, syndication deals, they call them operators. That's sort of a non-technical industry term, right? Kind of like bro. Anyway, so I met them, and that the experience and getting involved with them and really learning their industry gave me the ability and the strength when, luck is when preparation meets opportunity. I met, this fourth generation global art dealer who comes across opportunities at about 50 cents on the dollar and sells it, at close to what it's supposed to be. And so we help people make those returns. And I was able to, through setting up an SEC fund, which is what these syndication real estate syndication deals is based on. So based on that, I took it forward with the art fund. The debt fund is the same concept, and the intention was always, the roadmap always, to get right back into real estate again as a general partner, as an operator myself. So that's where the June and July road trips to start identifying good markets and sources of opportunities. New real estate purchases will come up, and then obviously we'll do a letter of intent on a property, 30 to 100 unit multifamily deal. We'll letter of intent. We'll do the due diligence. Once we know we're moving forward, we'll start presenting the opportunity to investors and do the raise. And again, real estate, multifamily real estate is a team sport. So, I'll be involved with some of these great operators that I've been investing with and involved with for many, many years. So it seems like a win-win for everybody. And, as a general partner, I get bigger, smarter, got to crawl before you can walk, before you can run. And that's exactly where I'm going, Raphael.
Mhm, mhm, mhm. Yeah, and actually, so I was working with one of my clients who was in real estate, and he also recommended that I start looking into multifamily units. And his strategy was that you can rent out, let's say, for example, it's like a 4 unit, is it a 4 unit building? You can live in one of them and
Mm-hmm.
rent out the other three,
Mm-hmm.
and essentially pay it off over time and use that sort of, I guess, whatever small profit margin you're able to make from those
Mm-hmm.
to pay off where you're living, essentially almost quote unquote living for free.
Right.
But I'm always interested, like, is that how safe is that investment for somebody that is sort of just starting out in the world of real estate? Because I'm sure that it's not as simple as people make it seem online, right?
Well, I wouldn't say that anybody that's new to it should go out and do it tomorrow. All you have to do is, in your local market, Google real estate meetup, and you will find 10 of them, and you start going to them, and you start networking just like I'm doing, spending time traveling across the country meeting people, and you will find them and you will learn. And yes, everybody recommends start with a duplex, fourplex, sixplex, eightplex, whatever it is. Just get started that way. And what you just identified is a great way to start. And there's a lot of people that, they'll take like a fourplex, they'll rent two out, they'll keep one and they'll create an Airbnb on the other. And that's a pretty standard road for profitability compared to a real estate syndication deal that's a little bit larger. These are typically 5-year deals. They can be as short as 3 or less. We look to provide a 20% return every year, or ARR or IRR, annual run rate or internal rate of return. And the way they do that is they'll pay 6 to 8% in dividends throughout each year, quarterly, each year throughout the 5 years or throughout the hold period. And then when they sell the property, and they make improvements, so they get what's called NOI, net of income, on the property. And when they do that, it's a value add strategy. So the building is worth more. And in doing so, they can sell the building for a profit, return money to the investors. The GP makes money, the investors make money. If you do it right, you turn around, do it again, and keep your investors happy. That's really the approach.
Wow, very cool.
Yeah.
And so you're basically you're not using any of your own money to do this, right? So you're just facilitating the deal. You're doing most of the heavy lifting, I'm assuming, but you're not using any of your own
Great
money.
question.
And that's one thing that I've heard from most people that aren't real estate, like they never use their own money.
Yeah, well, there's two schools of thought here. Number one, everybody say, the grand poobah, OPM, other people's money, right? That's how you get going. So typically these multifamily deals, if it's a $10 million deal, they do 65% loan to value. So they have to raise $3.5 million, right? And if you're a new operator like I am, I'm putting skin in the game. I'm putting money in as a general partner. There are other fees that operators will make, such as an asset management fee or a construction fee. These are standard in the industry, or an acquisition fee, and the acquisition fee is like 1 to 3%, something like that. So some of that money can be kicked back into the property as well. People, it takes a year to find a good piece of property and you got to underwrite probably 50 to come up with the gem. When we say underwrite, that means we look at what the building costs, what the rent roll looks like, what the expenses are, what the potential upgrades are, and then see if we can make money throughout the process and keep raising rates and raising rental rates, and to keep up with the market, right? And then sell it for a higher price. Really, that's all you're doing is buying leases when you're buying multifamily. Of course, there are other things involved, such as investor relations and financial reporting and property management and managing the property management firm and doing the construction management and that sort of thing. So it's quite a bit of work, but it's also a great reward. And those that are really good at it make some big money at it. So that's kind of the route I'm going. I know I've done very well, when it's at a 20% per year, all the deals I've been involved with, I've been through a dozen deals as a limited partner. And 7 of them have gone through full cycles, which means I doubled my money on each of those. And I still have 5 outstanding. So I know the industry. Now it's time for me to roll up my sleeves and start doing the work instead of sitting on the couch.
Wow. And so do you think that this is probably the best way for you or for anybody listening to start building what you call, I guess you would call it, like generational wealth?
Yeah. So, yes, generational wealth. That's probably, there's two things, you don't get rich off a W-2. You just don't.
Right.
So you ought to be an entrepreneur in a high growth industry or get into real estate. And that's where most fortunes are made. Absolutely.
Yeah.
Generational wealth is exactly my why. That's what I'm doing this for.
Mm-hmm. Mm-hmm. Okay. Now I'm also interested in terms of if you could maybe help me get a good understanding of like the real estate market. I know interest rates are very high. Can you sort of give us an explanation of where we are in terms of the real estate market and how you're leveraging it to still be able to make money no matter where it is?
Sure. So I started in 2019. From 2019 till right up until end of 2021, or beginning of 2022, almost everybody that did it, it's like everybody's a a master at a game when they're making money, right? So the
Right.
game has gotten a lot tighter with high interest rates. We saw the highest and fastest rate of interest rates ever going along. And on top of that, everybody that got in the game, or many of them, were doing these, they're called agency loans, Fannie Mae, Freddie Mac, interest only for 5 years, planning an exit, that kind of thing. Some of them bought a rate cap. That means they can only go up so high, but that rate cap also has an expiration date. So today, interest rate is an exposure or a risk in the deal. So if the deal underwrites with current interest rates, I would try and get at least a 7-year interest only loan, and better yet, a 10% interest only loan, or better yet, a assumable loan from the existing seller or seller financing. So interest rate's key. Now, I don't want to go too deep on this, but there's such a concept as cap rate. Cap rate is the inversion of the value of the multiple, right? So when interest rates go down, cap rates go down, value of the building goes up. That's the simplest formula I can explain it to you. So if there are, throughout a 3 to 5 year hold period, a return to normal interest rates, then the value of the buildings that are purchased today, buildings that underwrite today at profit with loan servicing and paying the dividend to the investors, as well as having enough money to do the capital improvements, capex they call it, then when interest rates go down, that only adds to your profitability, if you will, because your interest expense goes down, so you make more money at existing rates as maybe rental rates are going up. There's one other issue in real estate today, which is insurance. We've seen the insurance market nationwide go bananas, and in some areas just off the charts, like Florida, for example, which used to be a fantastic market and maybe not so much today. And you can't really underwrite insurance. You can do your best, but you have to have some accommodation for an increase in insurance, or if an insurance market collapses. So, and you can't operate a building or a multifamily syndication without insurance. So that's got to underwrite as well. So yeah, there are some risks involved, that's for sure. But buy right, do the right things in the deal, and you will find deals. There's going to be quite a few, I predict, operators or loan servicing companies that are going to be helping operators get out of multifamily, and those might be some discounted deals. As interest rates went up, the inverse of my cap rate discussion a moment ago, cap rates went up and values of buildings went down. So the values of buildings today are a lot less than they were even 2 years ago. That'll change. It'll change. It always does. But right now, values are a little bit lower. And then if you can get sort of a deal on maybe a distressed situation, not to take advantage of anybody's misery, but someone's going to buy that building, and I would like to be the guy to do that. And everybody I'm networking with wants to do that too. So it's those folks that bought those interest only non-rate cap loans that are now underwater and not making money and in quite a bit of trouble. So that's what we're seeing in the market today. It's tread carefully. For your listeners that haven't done it, start small, work your way up. I was listening to a guy just this past weekend who was, swinging a hammer, and then he started a construction company, and they started building onesie twosie houses, and then he bought a couple of duplexes, and from the duplexes he bought a 20-unit building all on his own, and then from the 20-unit building he went back to the people he sold houses to and started doing multifamily, and today's worth $65 million, and that all happened in the last 5 years. 5 years.
Jeez.
Yep.
Yeah. And I think, I don't know what percentage of millionaires, but I think it's like over 80% or some. It's a pretty large number of millionaires in the United States become millionaires through real estate.
That's right.
And I think right now it's like, there's a lot of content around real estate. There's a lot of information that is not necessarily accurate, or might be built out just to get clicks and impressions, or to sell you a course or whatever have you. So you've addressed a lot of the opportunities, but again, so for somebody that's starting out, what are maybe some of the risks that they should be assessing when starting out in something like real estate, especially if it's somebody that maybe doesn't have a lot of money, maybe they don't have a great credit, but they want to see how they can start sort of wetting their beak, as they say.
Right. So again, if you have the desire, you will learn it, and that's the key, is to master the material. And we talked a little bit about that in our last podcast as well,
Yeah.
right? So you have to know the market you're getting into.
Hmm.
It's I you know I saw a mid-20s single lady buy a house and renovate it, and she's already making big money. So the problem is, it's not a great time to be buying houses with 7.5% interest rates, right? So
Right.
so the first thing I would do is figure out where you're going to play. Maybe partner up with some folks so you can come up with a down payment. Learn the business, learn the trade, and then start going to meetups and grab a course or two. I mean, I've been to other masterminds. There's Rod Khalifa's out there. I've been to his boot camp before. There are lots of ways to learn the game, right? In multifamily syndications, it's a team sport, and you can become a GP just by helping to raise capital, or you can become a general partner just by doing underwriting and helping the operator themselves, or you can do an asset management role, or you can oversee the construction component of it, or manage a property management firm. So there's lots of what they call avatars in the multifamily, because again, it's a team sport and it requires a number of people to do it.
Yeah. Yeah. That makes sense. And I guess you would find something that best fits your skills, but also your interest, and ultimately you have to like it, right? I mean, because if you like it, you're gonna be doing this for a while. I'm
Yeah,
assuming you would have to have some sort of interest, right?
better than hating it.
Yeah,
Right.
yeah, 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 yeah.
Once you make
Uh,
some money, you'll like it.
yeah, that's a great way to like something for
Yeah,
sure.
for sure.
um, so in terms of one of the things that I find interesting about art is that art is only as valuable as I guess people as it's as valuable as much as people are willing to pay for it.
Sure.
And so, in sort of the art business, you're working with a very experienced partner, which obviously, works to your advantage. But have you now come to sort of understand, if you look at a piece of artwork and you say, okay, this is an artwork that maybe I can get for a lot cheaper now, but if I expose it to the market, is there like a marketing component to it? Is there like the way that you position the piece of art that makes it more expensive so that you can sell it at a higher price? How does that sort of process look like? It's super interesting.
Great question. So it's a big topic. So first of all, there is a tremendous amount of data out there on artist and art piece history, unless of course it's a newer artist and it's a piece that's never been on the marketplace before, right? So,
Mhm.
in which case, but if the artist is well known but the piece has never been on the market, then you can look at associated works in the same time frame with the same genre, right? So we focus on 19th and 20th century American European impressionism and modern art, and that's our, and museum pieces. That's what we're doing. So it's a little bit unique. So the way that we are able to be successful really is that we curate our opportunities, and the way we do that is, my partner fortunately gets 4 or 5 buying opportunities a day. It's the same thing as underwriting houses, right? So there's going to be some good buys and there's going to be some bad buys, and we look for pieces that are at around 50%. It's, say a billionaire wants that wall space, so he's going to take it off, or he's going to sell a piece for 5 million because he could turn that 5 million into 50 million, in 2 years. That sort, and maybe buy the piece back. Who knows? But so it's a global network of historians, curators, collectors, high net worth individuals, and then art has traditionally outperformed the S&P 500 in every single downturn in the last 25 years.
Wow.
So S&P is down. It's outperformed gold. It's outperformed everything. So art is a great, in an inflationary period. Art is going up like crazy. Now there are other art folks and funds out there. There's a big $800 million fund. I just got an email from them. They sold a I won't mention the artist name. They sold a very famous brand name artist, and they were bragging about a 9% per annum return. We're trying to produce 35 to 45% returns, so we're a little bit different. Their model is just like a mutual fund. You want to buy this Picasso, it's $20 a share. You can buy as many shares as you want. The shares are not liquid unless they can you express interest to resell them, and they might be able to sell it for you on their internal marketplace. But in any case, you're locked in until that sells, and it looks like their average hold time is about 3 years. We sell within 1 to 3 or 4 quarters on each piece we buy, right? So
Oh wow.
yeah, and then we turn the money back quarterly dividend if there's a liquidation event in that time frame. So it really comes down to knowing the market, knowing the data, buying right, having a purchase offerings, and then making sure that you sell that piece within the correct time frame. That's it.
Gotcha, gotcha. And
Mhm.
so then whoever invests in purchasing that particular piece of artwork,
Mhm.
they get a certain amount of stocks in that painting. Whenever that painting does get sold,
Yeah.
they're gonna make a return on their investment based on whatever percentage profit margin that piece of artwork made, correct?
Right. So that's this other competitive firm that's 800, the 800-pound gorilla, right? What we do is everybody that's invested before we make that purchase has equity in that purchase. And then we just distribute based on the profits in the equity. And we have what we call a waterfall, but
Oh, I
we
see.
give every year, we give 21% preferred returns to our investors before we make a penny. So, and we expect to make a penny. So that, I mean, that's how we can afford to give this 21% return. And it's a private art fund. It's a 506B. It's friends and family. It's only available to people that I know and have had, I've had a number of conversations, and we expect it's going to grow organically. Our first raise was $1 million. We did that, early this year, and we expect to grow to 2 million before you know it and get to 4 million. And then we're going to reassess if at 4 million we can continue to produce the kind of returns that we've been doing thus far. And if we can, then we might see about raising our ceiling and inviting more investors in.
Got it, got it. Yeah, because I mean, 21% return is huge.
It's huge.
And so are you taking a little bit of profit as sort of like a business strategy where you're doing it to be able to really be very attractive and competitive to the people that you're working with, or are you doing it because this is sort of like a passion project for you? You're not really in it for the money. You just like the process, and whatever you make is what you make.
No, I'm in it for the money.
Yeah,
I appreciate art, but I'm doing it to make money. I'm the fund manager, and
yeah.
I brought this my partner who is the operator in for the purchase and acquisition and selling component. That's his bread and butter daily, right? And in this short period of time, he's probably done about 20 million in sales this year. So business is booming, and we're gonna keep moving forward. And the investors get paid first. There's no dollar is more important than an investor dollar. So the investors get paid first. They have an opportunity to roll over after each fund year or ask for return of capital. And as soon as we sell the last piece they're invested in, they get all their capital back less our 3%. That's our fee for legal and for accounting, basically.
Wow, wow.
Hmm.
That's awesome. That's awesome.
Cool.
And so you got into this because you met this individual, or did you meet him with the purpose that you wanted to get into the art business, or it was just kind of like a, hey, right connection at the right time, right business opportunity, let me dive into it.
Great question. So we're friends. We made friends. We're friends, and we have actually done some individual investment together in art. Because of this great profit opportunity, and because of my real estate syndication experience and understanding funds, I proposed the fund to him, and it probably took us a good 9 or 10 months before we had every detail ironed out and we were ready to launch. So, there's a lot of, I just mentioned investor dollars are important, and we're both, on the same page that we have to keep our investors are precious, and we're never going to do anything that's going to take a risk. And make sure we always are. No one can ever say you didn't do the right thing. So we're always taking the right approach, and we're very cautious about the moves we make. That's why we don't buy every piece that comes our way, if that makes
Yeah.
sense.
No, that makes perfect sense, and I think that most people that are handling other people's money should probably be approaching it the same way you do.
Mm-hmm.
And one of the things one of the key takeaways that I'm getting from a lot of this is that a lot of the key to your success has been your ability to connect yourself with people. So like you're traveling everywhere to meet, go to different networking events. You understand that you shouldn't be the smartest person in the room. Was this something that you always sort of knew that you had to do? Like just put yourself out there as much as possible and shake as many hands as possible? Or is this something that you've started applying more so now because you've made a pretty big shift from like you were in software and and then now you're shifting over to something seemingly very, very different? Um, how did that process sort of go for you?
I'm glad you touched on this. So back in 2016, there were tons of gurus everywhere. There's courses, coaches, mentors, that sort of thing. And I just decided I knew there was a market for the software I was going to start. And so I started it, and I recruited some of the largest e-commerce sellers out there, and let them use my software for free for a year and test it and flesh it out. And once we were ready to launch, they told their friends, and we kind of went viral. And each year after 2018, I said, okay, this is the year I'm going to get a coach. This is the year I'm going to get a mentor. This is the year, I learned from some good people previously, but that's the foundational stuff, right? And no
Yeah.
one, I don't care who you are, no one knows everything right off the bat. And yes, I did master my material so that I was able to help our customers be more successful as well. But not until I branched out into the capital game did I decide that I was going to, that was the mindset shift where I was going to get out there, meet people, get involved in some coaching programs and some, pay for masterminds and, really invest in myself and grow. And, the time spent trying to figure it out yourself when you could be that much far ahead is a big waste of time. And so getting someone that will get you up to speed quicker, and teach you and be there and hold your hand and help you be as successful as you can be, it's invaluable. It really is. So I fully, now I'm not saying go out and spend $30,000 on coaching and masterminds and that kind of thing, but I am saying get out there and meet people, find out where you're a best fit, find out, based on your budget and your desire and what you're trying to accomplish, go out and get someone that's smarter than you doing it, that might be offering some mastermind or coaching experience. And there's a lot of fakers out there, as many, just look at all the, Instagram and Facebook, agencies out there trying to help people be successful and advertise. And, most of them aren't worth the paper they write their offer on. So,
Right.
that's been my experience thus far.
Yeah, and I'm glad you brought that up because that was gonna be my second question to that because yeah, I mean I sort of now when you hear mastermind because there's so many fakes out there
Mm-hmm.
and so many fake gurus and like wanna be billionaires
Mm-hmm.
and so they put together these masterminds and it really is from what I can tell not worth the money. So number one is how do you identify what a good mastermind is so that you're actually connecting yourself with the people that have been there, have done that, and can actually teach you the things you need to learn.
Right, right, right. So, I mean, in the real estate space, if someone has a portfolio of 50, 60, 100, 200 million, they probably know what they're doing, number one. Number two, if they've been putting out content for a long time, so they have a demonstrated record of success, they put out content that you align with. And number three, you go to meetups and you meet people at these multifamily conferences or these other local meetups. You find out who is the real deal and who isn't. Then take them for a test drive. Go, ask for a guest sit in on what they're doing and review their material. And if you think it's got enough value, don't just fall for the hype. If you think it's got enough value, then maybe dip your toe in the water, take the lowest plan and then maybe migrate to the next plan they might offer, that sort of thing. For me, the days of 30,000 mentoring is over. That doesn't mean I wouldn't spend 30,000 on marketing infrastructure, but I wouldn't spend it on someone tell me which button to push.
Right. Yeah, yeah, yeah. And one of the biggest people that I've seen online in terms of like giving advice for multifamily house units and things of the sort is Grant Cardone.
Mm-hmm.
And a lot of people have been coming around saying that he's actually kind of a charlatan. I can't confirm or deny that, but based on your experience and if you've heard of him, what's your take on the guy?
Well, I went to in Los Angeles at cross street from the Staples Center a Grant Cardone meetup, and it was a fun, high energy event, and he was selling his coaching services and that sort of thing. I knew a little bit about multifamily and the process beforehand, and I didn't think this is exactly the question about how you vet your coach and your mentor, right? I didn't think
Yeah.
he was offering enough in-depth training and assistance to really get me where I wanted to be. And interestingly, one of the guys that runs the Tampa mastermind I'm in, used to work in Grant Cardone's fund, took it from 100 million to 3 billion. So, there's a guy that knows it, does it. And, and again, I know some people that are in his program, and he invited me to take a test drive of his Tuesday, Wednesday meetups. And I went to that, and then they had a mastermind last weekend, and, I'm already in his mastermind, and it's not 30K. I promise you that. So, it's a great opportunity. So yeah, Grant's he lived, Grant's thing is his image and success, and maybe, a little, maybe he's mighty proud of himself. So, the private jets and that kind of thing. I hope anybody that's taking Grant's course, I'm not saying anything bad about the guy. He just wasn't for me. And I hope that anybody that has taken his course or taken any coaching from him, that they're very successful with it.
Yeah. Yeah, you oftentimes don't really hear a lot of the success stories, and I guess maybe it's because they're sort of overshadowed because he has such a large social media presence.
Mm-hmm.
Because I think at this point everybody's heard of the guy.
Right.
So yeah, and it's also interesting because a lot of people are coming out saying like, oh, he's full of crap or whatever. But again, it's really hard to kind of make something out through the noise unless you've been there.
Right.
Awesome. Well, so Ron, in terms of I remember you also mentioned you were doing some work with Bitcoin at one point. Is that still a thing?
Yeah, so we've shelved that project for now. So through my travels, and even before you and I met for our first podcast, I had spoken to a couple of high net worth individual. We're talking 500 million and up. A whale in the Bitcoin space. I do still network with the blockchain folks, and I spend a lot of time on it. But right now, the regulatory environment is not conducive to investment, and until that changes, I'm not investing any more money in it. So yes, we incorporated offshore. We had an exchange running in our lab. We still own those pieces, and if the time is ever right to move back into it, we will. But I'm not looking for an SEC audit or any other issues related to that. So that's kind of, the billionaire said, Ron, you're a smart guy. We want to work with you, but we're not investing in this. So I had a $20 million, plan I was going to raise money for, and we were going to use AI to produce 300 expert articles and interviews and podcasts and content, and, maybe call you to help us market it and all that stuff. And no, not the right time.
Yeah. I do have I have such a fascination with people that have so much money,
Mm-hmm.
and I always wonder: are they in some ways different? Not like they're still human, obviously. Like
Mm-hmm.
they go to the bathroom like we do, but I'm saying their outlook has to be a little different.
Mm-hmm.
And so because you network with so many of these people, you're always around them.
Mm-hmm.
What are some of the similarities that you've noticed in these people and how they behave and how they operate?
Sure. So they're good listeners. They have quiet confidence. They've already made it. They can spot a fake a mile away. So you better be, return that authenticity. They also have a passion for what they're doing, and they know their business before they invest in it, and they're willing to do the things that other people are not willing to do. So they refine their business operations with SOP. I was just listening to a $1.2 billion guy last weekend in Tampa, refine his business. He only takes institutional money for his A-class 300 unit buildings that he buys. And he's not making a ton of money on it, but he is making money, as much as the guy that's doing, the 100 unit buildings and that sort of thing. But his raise is better. And he's got a big team. The guy's already had a nine-figure exit, and just quiet confidence. He's very contemplative before he answers any questions on the panel. A really nice guy. He's told some stories about mistakes that he might have made. They're human, like you said. They put their pants on one leg at a time, just like us. I thanked him for showing up. That was about all I could say to him. I really appreciated some of the comments he made.
And so, in quiet confidence, I think I know what you mean, and I think you can tell a confident person when you see it. And this might be a little bit off topic, but there is, how they and this is some pretty colloquial sort of term. It's like hood rich, right? It's like the guy that has the least and wants to show it off as well. So he has the chain and the car, and so they really try to be very flashy. But that doesn't seem what these guys do, right?
Right. So, I always live by the motto that smart people don't have to tell other people they're smart because people just know it, and rich
Right.
people don't always need to tell people they're rich because if they need to know it, they will know it. And
Right.
this $1.2 billion guy that was on the panel last weekend, someone asked him a question about how the question started off, well, most people do X, Y, and Z. And so he sits there and he sort of rubs his chin and very, very low, calm voice says, his first response was microphone up, says, cocks his head, I'm a little different. The room blew up, right? Everybody, they just love the fact that there's authenticity, right? And you just knew by the succinct answer that he gave that yes, he's different. He does things differently, and that's all our challenge, right? We have to get better. We have to constantly improve. If you're not going to do it, the next guy will.
Yeah. 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 And you know what? I think it's sort of ironic that when people feel like they've made it, they stop growing. And so it's kind of interesting because it's like the more you feel like you have it all in terms of like your finances, and the more that you like to flash that the less you're actually prone to have, because you've kind of gotten to a point that you stop learning.
Mhm.
And what it seems like that you're saying is that these guys don't ever stop learning and improving and finding new ways to improve either their business or make new partnerships and so on and so forth. And I guess my question to you is that something that you live by as well, and how do you do it?
Absolutely. So, just I'll relate the answer. So this $1.2 billion gentleman's on, in the panel group, and they said, you had your nine-figure exit, you got $1.2 billion assets under management in your group. You've got a dream business for anybody that's in the room. There's 80 people in the room. They said, why do you keep doing it? And his answer was, I like winning. I
Mm-hmm.
like winning. And so if you want to win, you have to be willing to do what other people are not willing to do, and you have to grow and scale yourself. And if you can't get there, you need help. Find someone that'll help you scale yourself and just keep working on it and getting better every day. If you really care and you're up at the crack, I mean, we never talked about morning routines. Do you have a morning routine, Raphael?
I do.
Good. I do too. I'm up at 6. I'm out the door at 7:30 or 8. I'm in the gym till 9:30. I come home, I shower, I get a bite to eat, and then I start my day, and it's over whenever it's over. Customers always come first in the software company, and I'm working on refining, all the funds and fundraising activities that are going on. So that's,
Mm-hmm.
pretty much my day. And then I plan my day out too. So,
Yeah.
I look at my calendar every day, so I generally have an idea what's on the schedule for tomorrow. My to-do list is ridiculous in terms of the length. I put a lot on myself, but I'm also easy on myself, saying I didn't get it done today, I'll do it tomorrow.
Yeah. Yeah. And I think having that structure is so important. And
Hmm.
everybody that I've talked to on this podcast
Hmm.
that has a pretty high level of success, they've all said pretty much the same thing. It's like I have a structure to my day, and every day is different, right? Some people
Hmm.
like to start their day a little bit later. Some
Hmm.
people like to start their day a little bit earlier. Some people
Hmm.
like to end it later. Some people like to end it earlier. But
Hmm.
nevertheless, they all have like a structure of how their day is going to go.
Hmm.
And it's crazy because I meet so many people all the time that they're just kind of going by the day by day, sort of waking up and like, all right, whatever comes that I have to do today, I guess I'll do it. And I cannot imagine living that way, but it seems to be the case that most people have that sort of life. And what I struggle to understand is it's really so simple to sit down and just write stuff on a planner,
Hmm.
but yet so many people refuse to do it. And so I wanna really pick your brain with this. Is this something you always did? When you didn't do it, what made you realize that, hey, I have to have some structure here, otherwise I won't be able to get to where I want to go?
Right. Great point. So, being an executive in a software firm, there was always demands on my time. So I was very, very calendar driven. But at the same time, when you're a W-2 employee and you're making, multiple six figures, I didn't always, but I have, and I do. I learned that I can't just let life happen to me. I need to effectuate my success. And by doing that, I'm going to plan what I want to accomplish. And it goes back to what I said earlier, as an entrepreneur, everything's driven based off thinking big and then acting on those big ideas to create results. So
Yep.
that doesn't happen just by letting, opening the front door and letting the breeze hit you in the face. You have to get out there, you have to meet people, you have to network, you have to create and build value for people around you, and then they will come. If you have a solution, provide value in the marketplace, people will come. And if you have been able to get to that hurdle, the next step for people is to refine their businesses and figure out how they're going to grow and get to the next step. It's grow
Yep.
or die is my approach. Grow or die.
Grow or die. That's right.
Mm-hmm.
That is 100% right. And nature functions the same way,
That's right.
right? If you're not growing, you're dying.
Yeah.
Um,
You've heard the expression, the path to success is not a straight line. There's ups and downs and that sort of thing. But
yeah.
most people, Bill Gates, I'll quote right now, most people do less in a year they thought they could, and way more in 5 years than they ever thought they could. So, it's a matter of getting after it and master the material, build your plan, work your plan, have realistic expectations, and it takes hard work. It doesn't happen by, taking afternoons off every day.
Yeah. 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 That's 100% true. And that's some of the misconceptions I've been hearing a lot, where it's like they talk about lifestyle business, and I think
Mm-hmm.
the misconception is like, oh well, I work very little
Mm-hmm.
and I live a lot.
Mm-hmm.
And I don't think that's necessarily what it is. I think it's like the way that I've perceived it is like, how can I build my lifestyle around the demands that I have to get to where I want to go. So it's like, if I have to work this next 2 or 3 weeks a lot, I'm gonna sort of mold my lifestyle around it, so that maybe in the next 2 weeks I won't have to as much, and I can mold my lifestyle around it. So it's almost like a kind of give and take that continues to happen, and that's sort of the way that I interpret it. But you have a lifestyle business. You mentioned it in a previous podcast. What is that like for you?
Well, so fortunately, the software business, I've got really good people that are running it right now, so it allows
Mm-hmm.
me to focus my attention on growing other endeavors, right? But
Mm-hmm.
when you talk about a lifestyle business, I think it's more work-life balance. Businesses don't run themselves. I said this in the last
Yeah.
podcast. They don't. So you need to pay attention to it. You need to have your finger on the pulse. Someone said to me once, one of our clients said, "Man, I had one of my employees doing payroll and they stole from me." And I said, "Really? They've accessed your bank account?" He said, "Yeah." I said, "Well, there's your first mistake right there." So that doesn't mean you can't trust people to write checks or whatnot, right? But that it better be someone that you better have some refined process and review the payroll numbers. I mean, he came to me 3 months after he discovered the error, or the issue, right?
Yeah.
So whose fault is that, right?
Right.
Anyway. So yes, work-life balance is critical. If you're on a path to try and be the best version of yourself, then a passive lifestyle business is not going to get it done. If,
Yeah.
on the other hand, you have achieved your level of success, you enjoy working a few hours a day and then, going water skiing in the afternoon, and you're able to do that and still maintain the lifestyle, then more power to you. I'm not able to. I also don't subscribe to the 24-hour, 7-day a week, round the clock grind. I think you need to take time off. You need to relax. You need to refresh, be ready to go back and hit it hard the next day. Even if you had a rough day, go back, put on a smile first thing in the morning, go back to your plan and start working on your plan, and, good things will come.
Yeah. Yep. I agree with you 100%, Ron. And so I think this is a great way for us to wrap up our episode. But before we do, Ron, one of the things that I've started asking a lot of my guests is, if there's one or a few key takeaways that you would like for people to walk away with from the episode, what would that be?
A couple key takeaways. So, we talked a lot about my journey, my previous podcast, mindset, my process, the things I do. I think anything is achievable if you really put your mind to it. If we look just at the real estate component, I will share a story. One of the best operators I know, the Kitty sisters. They're out of Glendale, California. Nancy, Palmy, if you're watching this, forgive me if I got the city wrong. But they started out in 1999. I invested in their first deal, and today they have 300 million assets under management. So don't tell me you can't do it. They did it. You can too. There's always going to be excuses and rough time, but just, sometimes you got to take it on the chin, but get up, dust yourself off, and get back to it. Master your craft, know your message, create value for the people around you, and success will follow.
I love that. I love that. Ron, thank you so much. It was a pleasure to do it again. And who knows, we may even do it one more time in the future.
My pleasure, Raphael. Thank you for
Thank you
having
so
me.
much, Ron.
Have
Bye
a
bye.
great day.